So this is going to be an update on 4 individual stocks which I've been speaking about to you over the past 1 to 2 weeks. Those stocks are eBay, Facebook, Twitter, and also ALK, which is the Alaska Air Group. So what I'm going to do, I'm going to cut this video recording very quick. I'm going to change to my charting software and get into the actual analysis. That is what, of course, you are watching this video for. So what I'm going to do is just change over right now to my video template or my charting template. And what we'll do, we'll start with eBay. So as you can see, 2 days ago, I updated the trade entry and put it in at about $48.98. Of course, I espouse that in your own virtual accounts. As of Thursday and Friday, you should be triggered into this individual trade. It is marginally profitable at the moment, but it does have a risk-reward ratio of over 10 to 1. We have at least $10 of upside potential up to $59 with only 90 cents worth of risk. So this trade should be taken just based on the incredible risk-reward analysis. Now, one thing which is coming, which I'm seeing right now, is that during this little bullish pop, it's not a V bottom which we saw during November and December, and it doesn't have that vitality, or at least the bullish pop, which we almost expected a couple of days ago. Now, again, that's not the worst or the most troubling signal. What I am seeing is the fact that if I zoom in on the detail, let me just do this for you. You can see that we are declining in volume, and we're setting up what appears to be a little bit of a bear flag. So although I am also positioned in this stock, I'm just telling you what I'm seeing on this, and I'm being as completely neutral biased in the way of the analysis. So if I am in this stock, I'm going to leave my stop down here at $48.08, but I can see potentially a little bit of a sideways market movement, a little bit of a stabilization in eBay before we get that incredible pop to the north side, which we are expecting. If this stock fails, if this is a bear flag, all right, let me just change to a line chart so you can see this. If this is a little bit of a bear flag and we start breaking down, we get stopped out at 48.08, then I'd be looking to enter bearish at 47.77. At that stage, we're looking at lows or the next support level down here at $45.66 a share. So if we get stopped out on the bullish side, we break down below 47.77, we're looking at 45.66 as our first target. I mean, this is really up in the air, all right? I mean, that's all we can really do in the way of analysis. We've spoken about this in such detail, just how important this support level is, and I do believe it is going to hold. I do think we could see a little bit of a pullback, or at least a little bit of a sideways move before we get the next oscillation higher. So that's my own wisdom, my own thoughts on eBay at the moment. Just position yourself correctly. You could also look to be adding to your positions, but why not just keep that original stake at $48.98 and just see where this stock takes us in the coming weeks. The market overall is looking sideways now to at least slightly bullish after the bearish retracement we have seen. Let's move into Facebook. Now, Facebook did have a nice little pop, and it has gone through at least the 2-day retracement. So you can see here we had two triggers, 64.64, another at 65.17. On Thursday, we had a really nice engulfing pattern, but as of Friday, we have a spinning top. This is fine. The volume has been lackluster since this really nice bullish candle. We're still holding above this gap. So anything in this area is still bullish, which is good. If you're not in the trade right now, you've got a really incredible entry, which you can just place right above the wick of Thursday. So if you move above 66.60, you can look to be adding to your calls in Facebook. That's the only thing I'm going to add. I'm not trading this on the bearish side. It does look good. We are above the 3 exponential moving averages. We do have that bullish gap. We have increasing volume on the bullish side. This could just simply be the ebbs and flows of the natural market as we've experienced that retracement for the past 5 trading sessions. So although Facebook is a break-even trade at the moment, keep relaxed, stay disciplined, stay calm, follow your trading plan. You should have your stop down here about 62 on the individual trade and just let this run. I do think it's going to build the legs over the coming days. What I'm going to speak about now is Alaska Air. Now, Alaska Air, this is a video I did probably 2 weeks ago. I mean, you have to go back and reference that for yourself. It's a whole video entitled Alaska Air. We spoke about this rising wedge. We spoke about the bearish divergence taking place across our MACD and price and across many of our other oscillating indicators, the RSI and the Stokes also. So we had a 1, 2, 3 here, and we could see the potential for a top up around this resistance level. Now, again, fast forward a week or fast forward 2 weeks, we had our entry at 96.63. And as of Thursday, we're trading down here at $92, or at least, 92 over here. Friday, we had an inside Harami. That's okay, that's natural, but I do think the bottom is going to fall out on Alaska Air, and we are going to trade down to ultimately $88.69, roughly, give or take, in the next month or so. So we're starting to see the bearish rollover. Sure, we can bounce. Sure, we can retest this old gap. You can see we have a gap here right at our entry. But again, look for this to fail just like this. You're starting to see divergence and all of these chart patterns start to play out on Alaska Air. Yes, we did see it coming weeks ago, but it's only until the trade confirms that you want to begin to entering into trades, if that even made sense. You want to be only entering into the trades once the trade confirms. Now, I've had a few students email me and they're saying, well, I was buying puts up in this area, and I mean, it did work out for you. Congratulations, but it's not the smartest move. You always set your trades or your entries into your pulls or your puts or calls only when it moves in your favor. That's why we use contingent triggers when we trade the stock market. We always want to enter when the stock is moving in our favor. Again, I teach that in our Axioms classes, so have a look at those classes. Finally, the last stock which I want to talk about is Twitter. Now, Twitter, I wasn't too happy about on the bullish side. I mean, it was a really forced trade. We are technically in a downtrend. You can see we don't even have a 50 exponential to work with yet because there's just not enough data to work with. This has been floated at the end of 2013. Again, we had a monumental failure, which a lot of our traders capitalized on going back a month now, and we're just struggling to make any bullish trades in the face of this bearish gap. Yes, we are starting to fill this gap. That's all well and good, but this 36.87 is really a forced trade. It wasn't something that I'm excited about. Now, what I can do, now this is getting a little bit creative, is bringing up my templates. And what I'd say is just watch for these two resistance levels. Sure, the trade is still compelling on the bullish side, but what I'm more inclined to set up is a bearish trade below this level right here, 34.06. This is what gets me excited because we could be continuing the bearish trend lower. Now, again, it looks as if we're setting up a little bit of a double bottom. There's all these things saying that, hey, the trend is starting to reverse. We could be setting up a little bit of bullish divergence. Not the nicest bullish divergence, actually. I take that back, but you can definitely see we're starting to set up higher lows, which is interesting. So the way I'm playing this anyway is that I'm not getting carried away on the bullish side. Yes, we can trade up here, but it is counter trend. What I'm looking for is the potential rollover below, $34.06. That's when I'm getting excited, and it'll be a nice shorting opportunity. Let me just bring this down to about $30.70. So you can see that's over 10% on this little bearish sell-off right here, which is incredible. And that can happen in the space of one day. I mean, honestly, it can happen very, very quickly on Twitter. So that's just an update on those four stocks: eBay, Facebook, Twitter, and Alaska Air, all looking really good. And that's what I'll do. I mean, I'll keep randomly selecting stocks with compelling trade setups every now and then. I'm not going to do all of them, obviously, but ones which are heavily followed on social media, ones which a lot of people follow and have in their own investment accounts and they want up-to-date information on, I will provide that to you. Also, if you want additional shares for me to track and give you updates on, put them in the comment box. Do that, and I'll do my best to at least make a video for some, maybe not all, but the ones which look as if they deserve an explanation or a trade setup. That's what I'll do for you. So write them in the comment box if you want to hear more about this trade analysis. Thank you so much for watching this. Have a fantastic weekend. I'll see you in our analysis class over the weekend and as we transition into trading beginning next week. All the best, ladies and gentlemen. Thank you so much. Goodbye.